Okay, just to show that I'm not trading on paper and I'm only not showing profits, today was a disastrous day. Um, I don't have a huge position. I'm just short. All these cancel out. I'm just short 26 of the 94 calls against about 1,500 shares of stock, and PayPal was down like $6 today. Um, the Fed is never a fun day. They always come out and they act grim, and the market usually prices that in. So they knew that they were going to raise basis points by lower basis points by a quarter, and everybody knew that they were going to like throw water on this enthusiasm, and the market's too high. But everybody seems to think that Trump is going to just keep pushing it higher. And they had it priced in that they would try to douse the fire and be negative, but they were more negative than people even expected, which makes sense because they're looking at the numbers, and the numbers don't really make sense right now. And I was leaning a little bit long. The QQQ, that was down like $20 because those tech names are really interest rate sensitive, and they announced that they're only going to probably cut like twice next year instead of 4 times next year. And everything is way too high, but people are making money, and Trump's going to push his foot down on the gas pedal. But could they cause inflation? Could there be tariffs? Blah 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 blah. And I was a little bit long against my calls, and I have a time spread that I wanted to talk to you about that does much better on the upside than on the downside. So I was leaning a little bit long, and PayPal was down like $1 when the Fed announcement came out, and it ended up like down close to 6. So I'm still long. I'm not really happy about it. It depends if the market's going to bounce back. There's the another inflation number coming on Friday. This could be, like it could really keep going down for the rest of the year, which makes my position horrible. The time spread I wanted to talk to you about was I bought the 92 calls in February, and I sold them in January. Now, if you look, volatility across the board has gone up, but the February calls that I bought, and it's kind of a diagonal just because that's all that existed. So we'll look at the Febs. And they're trading on a 41 volatility. And the calls I sold in January of 25, which is 1 week earlier. I'm short the January 24th, sorry. Those are trading on a 33 volatility, and you usually don't want to buy something that's higher in volatility than you're selling. Normally with time spreads, you just want to, it's a way of selling premium, and you want it to go to a strike. So it went away from the strike. I'm even a little bit long because I own the 92s because there are no 92.5 calls here. But the reason that I paid up and I'm buying higher volatility is because there's an event happening in February. Earnings are coming out in between this time. So I'm trying to capture earnings. And you'll see that I'm short gamma, which is, I don't really want the stock to move at all. And it being down, $3.5, $6 is not a party by any means, because I was leaning long as it was. And I'm trying to capture this premium and have these still hold on for earnings. And they should. Earnings is going to be a big deal. They've got a new CEO, and, their numbers aren't great, but everybody thinks that he's going to turn the company around, and the stock's been trading higher than it has in a long, long time. So, I would have preferred that it just drifted up to like 92 and a half, and I would really really done well. The thing about this thing is that, yeah, I am trying to capture earnings, and if these goes out worthless at some point, I could hedge these. If it's below 92 and a half, I'm basically long some calls, and if it's above 92 and a half, I'm basically long puts. But either way, I'm going to be back spread these after these expire, or I buy them back. Now, that doesn't mean that I'm going to have this earnings play on. And usually a stock can move like $5-10 on earnings. With these upside calls, the only real way, if I back spread them, that I could make money if it's below 92 and a half, especially if it's, $7 below it, is if the stock tanked. If it went up like $7, I'd get crushed. So, what I'm trying to do is I'm trying to capture this earnings volatility. And I'm not in the mood it's not going to jump to 120 on their earnings. So I'm going to have to sell these out at some point once these expire. Like I said, if it had drifted right to strike, and it still might creep up. I've got another month, it still might creep up. But, how much pain I want to take. And I do need to sell some stock unless it makes a big rebound tomorrow. But that's the plan. I'm not going to hold these through earnings. I'm not going to make an earnings bet because, like I said, if it's right here and it goes up $10 on earnings, I'm not going to make any money. I'll get crushed. If it falls $10, $15, I'd make a fortune. But that's not the kind of bet I'm in. Most of this was lost on deltas, and that's the equivalent of how much stock you are. And I started out long about 1,200 deltas, and I got long about 1,600. Right now, I'm long probably like 1,800 deltas. So that's not the way I want to trade. I don't want to be long this thing. This market could be in for a correction for the night until January. So I might have to just take my loss and deal with it. It's not the end of the world. It's things that happen, but look how much I lost on a $70,000 account in one day. Just being long like 1,000 deltas and having a position that made sense, but the Fed just totally rained on my party. But the whole point of this channel is to show you the risk involved, even if you know what you're doing. And like I said, like everybody expected the Fed to do this, but it was worse than they did, and everybody just completely panicked and sold. So they could keep panicking and keep selling and call it a correction, or it can bounce back. I don't know. I don't really want to bet on it. I'm going to have to think long and hard about closing all this. But what I want to teach you is that you can buy these time spreads for events. Right now, it would have made more sense if I had done, something on the 88 level, and then I would be a lot safer. I would still have some play involved, but I did it to the upside because I thought it was going to drift higher because, it was looking good and people are behind the stock. So hopefully it makes a little bit of a comeback. Hopefully it slowly drifts higher, or I'm going to need to get out. But again, the point I'm making is that I do tell the truth about my positions and my losses.